Federal Reserve's chair, Jerome Powell, has just finished his speech at 11 a.m. at Jackson Hole. This is an annual event where he addresses all the central bankers together on his and the Federal Reserve's policy stance, not only for one meeting, but for the next year ahead, what they want to do with interest rates and all of their other tools. And following that, we had the market rally a bit. Ethereum actually reaching all-time high. It's correcting a little bit, but it did reach 48.50 again. So things are looking good, but this this Jackson Hole speech has not been all bullish. A lot of people are misreading this a bit. While it is short-term very good for the market as it confirms the September rate cut, it does not spell the same outlook for the rest of the cycle of rate cuts. Namely, it's going to be coming slower. The number of total cuts are going to come slower than expected. And this is in Jerome Powell's specific speech today. But regardless, we'll go over all of the points really quick. And I'll show you what I'm looking at currently on Ethereum, on Bitcoin dominance, on my altcoin positions. I will show you my trading bot updates. The Ethereum bot actually has already hit take profit. It yielded a 13% return in the last week. Really nice. I'll show you all of that today. Okay, without further ado, let's go ahead and start it. So, let me walk you through the timeline really quick. So this morning at 4 hours ago, 10 a.m. Eastern, in Jackson Hole in Kansas, Jerome Powell has given this speech. Okay, it was a 20-minute speech purely for the sake of Fed policy. Nothing is numbers pivot, but really it sets a tone for the year ahead. So going into this meeting, going into this announcement, most people, most analysts have been pricing in that, where's my thing? Most analysts have priced in 71% chance of a rate cut in September. Now, right away, Jerome Powell said he opened with addressing the last 3 months of jobs data, which were revised down aggressively. We covered this before already on the channel. So essentially, unemployment is a lot higher than they were claiming. And since last time that they didn't cut in July, Powell said that Powell said on July 30th that the risk of inflation were higher than the unemployment risk. And so they didn't want to cut. They didn't want to cut too early because inflation was still too high in comparison to the risk of unemployment. But since the labor market numbers were revised down, now he says, okay, the two are balanced, so they're unsure. They're equally as important, which means it's already quite a big of a pivot because he recognizes it. Okay, so this is why right away the analysts started to price that the odds of at least one rate cut in September to be 91%. Currently, this is sitting at 87%, still quite a bit higher than before the speech. This is because some other nuances that he laid out. Okay, so continuing after that, he talks about tariffs potentially just being a one-time increase causing inflation to increase. That's why Powell isn't too worried about Trump's tariffs. He talks about trying to find this balance with inflation is rising, but unemployment still dropping. Sorry, unemployment rising as well. So jobs numbers are dropping. People are getting laid off and not finding jobs. And so he came to this finally. So before we get there, right, let's just say this. He even said directly by quote that I'm going to show you my tweet here. He says that, and I quote, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Essentially, a cut. Okay, so in the short term, a cut in September is most likely, even more likely than before. Before, it was purely based on the revised down jobs data. People were speculating, but there was still this event. He could come out and be still very strong-handed and say, we're not going to cut. Ultimately, they are the ones making the decisions. But now he even says, okay, it could warrant adjusting our policy stance. And he comes out and recognizes, okay, jobs market is doing worse than we were last tracking on July 30th. He says balance of risk is shifting. Okay, so those are all good. Right away, market is pricing this up quite a bit. Bitcoin bounced from 113 to 117 in the last 4 hours, right here. Ethereum bounced, right? You have Solana bounced. You have all the altcoins doing good. This is all because of the September meeting, September rate cut being priced in. Great. And an extension of that potentially is they could pause QT, because usually when they cut, they make a pivot and something comes alongside other things that they might change. In the only thing that's also mentioned in their FOMC statements is QT and QE. So they are now overdue for the pause of QT, which they hinted to be summer of this year. Okay, so that's all good. September, we will get a good meeting on September 16th, 17th. But there is this other part which says that the Fed is abandoning their flexible average inflation targeting framework. This is very complicated of a speak, and I had to Google this and ChatGPT quite a bit to learn about it over the last couple of hours to really get it right. But a lot of people are reading this wrong, including a lot of other analysts, newsletters, whatever. So they're saying, people are reading this as, okay, the Fed is no longer targeting 2% inflation, and they're preparing for a rate cut. No, this is actually the opposite. So what this means, in summary, is that the Fed has been using this framework called FAIT, F-A-I-T, Flexible Average Inflation Targeting, since 2020, August 2020, 5 years ago. Actually, conveniently enough, in the Jackson Hole meeting in 2020 is when they introduced this. So this strategy targets a 2% average inflation with a caveat of average. So the average here is interesting because that means they're not always just trying to make inflation 2%. Instead, they have what's called a makeup strategy. So this makeup strategy effectively is when inflation is lower than 2% for a while, they will cut rates to increase inflation, but they will not stop at 2%. Instead, they will allow inflation to overshoot and compensate for the period that inflation has been under 2%. So if you look up inflation data from the last 20 years, in 2019, we had inflation below 2%, as low as 1.6%. And this is why they introduced this strategy, which actually allowed them to cut rates more aggressively, faster, and leave it there low during this whole COVID period. Because they were using this excuse and this framework as, okay, we had a period of low inflation, now we wanted to overshoot and we want to have like 3-4% inflation. And this led to them losing track of inflation and letting it reach 9% in 2022. So now, the fact that they abandoned this targeting FAIT strategy, flexible average inflation targeting, doesn't mean that they are no longer going back targeting 2% inflation. No, they are actually going back to just a plain old flexible inflation targeting without the average. So what this means is, over the last 3 years, since 2022, inflation has still been higher than 2%. Right now it's at 2.7, 2.8, something like that. So the Fed, under this older framework, were allowed to have inflation higher than 2% as a makeup strategy because it averages out to around 2% since we had lower than 2% inflation before. Now, since they're going back to flexible inflation targeting without averaging, this means they're actually going to be more strict on getting inflation down, more strict on decreasing inflation faster. So this actually means that they cannot cut as many times on interest rate because they are no longer allowing them to have higher inflation as an overshoot makeup strategy. So this is actually long-term bearish with less total cuts. So just make sure you understand this. When you're reading stuff and watching videos, a lot of people are getting this wrong. I had to ChatGPT this quite a bit. I had to read Reuters directly and read the Fed's announcement directly to actually understand this. So Powell actually gave kind of a double take here. Yes, he did confirm most likely in September we will get a cut, but be careful around the September FOMC meeting because chances are we're not going to get a very easy continuation from that. And most likely they're going to reference this in some way and say that, hey, look, since we have gone back to just typical flexible inflation targeting at 2%, now we want to target inflation more to be more strict, to go down to 2%. So we are going to be tighter and we're only going to cut once and then we're going to wait and see again. This opens the door up for that further. And this is why, the rate cut cycle is going to extend even further, which is kind of sad, but it is what it is. This is what this means. So for our crypto investors' sake, maybe this doesn't even matter. Maybe all we need is one cut in September and then for QT to pause. And then we have, even if the whole thing pauses, no more rate cuts for 6 months, maybe that's still okay because rate cuts so far hasn't been contributing to price growth as much. Way more important is the Fed actually making a stance pivot like what they did here. So they are recognizing, okay, we do need to make a cut, at least one. So they could use this time to also pause QT. I'm optimistic about that. And if they pause QT, maybe that's all we need. And we have 6 months of bull run, Bitcoin goes to 200K, ETH goes to 10K. That's all that matters. So maybe we won't even need to see inflation come down to 2%. But in case it keeps dragging on and the Fed doesn't pause QT, then it could last even longer. So just keep that in mind. Okay, so that's all the macro stuff that went down today. Now let's talk about prices. Like I have mentioned earlier this week on stream, you got to stay bullish. Don't be bearish. It's ridiculous to be bearish right now. I mean, just look at this. We're back up to all-time high and it's all good. Look at Bitcoin dominance. I really don't understand the people that are still not saying this is the Altseason. I mean, look at the downtrend on Bitcoin dominance on the weekly. It doesn't get clearer than this. I mean, we're way past the number of weeks that the Trump altcoin rally has brought. And in terms of moving average, we're way below the 50-week SMA. And in terms of trend, we are in a weekly downtrend. This is way more convincing here than the Trump rally and way more convincing than anything over the last 2.5 years. So yeah, there's no question in my mind that this is Altseason. So I don't know what kind of thing you're smoking. If you're still not looking at altcoins, this is the time to be looking at altcoins. Don't let PTSD blind you. Just look at the facts. Look at what the chart is telling us. And Bitcoin dominance is downtrending on weekly. So that's it. Want to focus heavily on altcoins. I am actually in the process of updating a altcoin bull market strategy video. I'll have that published in the next few days, where I'm going to outline exactly how much I'm allocating to altcoins. But my portfolio right now is like 20% Bitcoin only and 80% in altcoins. I am still targeting large cap altcoins first before going to mid caps and low caps. I'm taking the time there, but I don't think the risk in large cap altcoins is that high anymore at this point. So Ethereum, Solana, XRP, Cardano, BNB, Doge, whatever. These are all really good picks right now. Just keep holding them. Okay. Lastly, just a little bit of update on our trading bots. So this morning, right after the FOMC event, our ETH bot hit take profit. So the upper range of the ETH bot is 48.50, and this has been hit on the ETH bot. So I have closed it and taken the profits. I want to show you how you can track all of these because it's actually kind of nuanced. So when you go on Pionex and you use these bots, right now I have 9 bots open still. So you see most of these. The most profitable option is to actually regularly compound the profits into the bot. But this will come as a bit of a confusion point. So you see how this XRP swing bot, we opened it way earlier, but why is it only showing 1.7% profit? This is because I compounded it this morning. So I'm going to show you this right here. I believe it's in transaction history. Yeah, funding history compound. So you see this morning, I have taken $796 of profits from the bot so far on this bounce. I'm going to move myself. I've taken $796 of profit and let it compound into the bot. So this is why the bot bought an extra 330 XRP and increased the investment amount. And that's why this total profit here is after the time that I have compounded. Okay, and I'm going to show you that in practice now. So let's say this Solana bot, right? We opened it at $177. Right now it's at $195. So we have quite a bit of profit. We have 1.6K profit, I believe. Really nice, 19%. So that is sitting on the side. You can actually use that USDT amount back into the bot. It will generate more grids and use that to buy again. So what you should do is when you're in big profit, let it compound. You go to the bot page, you go to more settings and click on compound. So you see right here, currently the investment amount is 8.1K. After compounding this 1.7K of total profits, this investment amount will increase to 9,800. So let me go ahead and do that right now. It does it, right? And here's what happens. Notice how our actual investment increased, right, by about 1.7K, but the profit amount got reset to 0. This is a big confusion part. Some of our group members have been messaging about this already also. Like, hey, look, my profits all disappeared. No, it went into your investment amount when you compound. So this is why I'm going to be doing a lot more compounding, but I won't always have that, large P&L number to show you. Keep track of it yourself. And actually what matters is how much money you actually have in that position. So each of these positions, we have started with $10,000. right now, this Solana swing bot started with 10,000. Now it has 9.7K plus 1.88K. So this is this is 11.6K. So that 1.6K is already realized as profit. This is why it's like this. And you click into the bot page, you can find the P&L chart on the right, and you see just now, right before we compounded, the P&L is at right here, 17.99 P&L. And then it got reset to 0 because we basically took profits and reinvested that amount. So make sure you understand how this is when you're doing compounding. So today, my actions are, number one, I have closed my Ethereum bot because it hit 48.50 earlier. And I'm going to compound all of these positions. So you see, not the Bitcoin one, but the SUI one is up 17%. XLM one is up 15%. Hype one is only up 4%. Link is up massive, 24%. So I'm going to maybe show you this one. So you see right here, currently it's worth exactly 10K, 5K here, 5K here. I'm going to do compound. It will add another $1,300. Click confirm. So you see right here, 1,200 got added to the actual investment and the profit got reset. So when you're doing this, just don't be confused. This is what happens. Essentially, the position gets reset as you take profit, which is a really good thing to do. Okay, so back to the beginning, when I closed my ETH bot, here is the history of it, because I want to show you. So in the history orders, here's my ETH bot that I closed earlier. So I first took a compound of $793. And then by the time I closed the bot, there is a cumulative profit of $928 there. So I invested 10K earlier this week and I got minus fees $880. Not bad. Yeah, so this is how you can actually see the real profits. When you go on your history, sometimes the profit will show very small. Just make sure you click into the position, go to the funding history, and then scroll down, and you'll see actually how much total profit you made. And you can see in the overview, total profit chart here before you took profit. It was $932 before fees. Okay, so that is it. I'm not going to be opening new bots yet, not on Ethereum either. On the point of Ethereum, even when I first opened this bot, I had a swing low as a support at 33.50. Now that we have reached the range high at 48.50, the previous all-time high, Ethereum should see some resistance. Sure, it could go to just 5K, but whatever. I don't want to chase this little amount. Usually when a coin as big as Ethereum makes a new high or hits a whole number like 5K, it tends to consolidate and it tends to come back down a bit just below to continue creating a higher low again and then giving us a next setup. And that's when I'm going to take it. So I think what's more likely is not for Ethereum to do something like this. I think this is pretty unlikely. Instead, probably going to consolidate a bit and then come back down just below the previous all-time high, but above our previous entry around 4K. So once this is made, where we have a clear next high and the next low, then we can take a new bot position and use the new low that we made at 4K as the low end range support and try to find the next target for the upper range. So don't rush into the next position. Otherwise, you might as well just be holding ETH in the first place. If you're always just opening new trades, that's not going to be the best approach. Take some time to let it sit. Ethereum is reaching all-time high already, so let it play out. Let people take profits at all-time highs. Wait for the next dip, and then I'll update you guys when I open the ETH bot again. I don't think this is the end. Obviously, I still expect it to reach 6 to 7K by the end of this year and 10K by the end of the run. So we are going to do more bots on ETH as well. For the rest of the bots, still open, still plenty of upside to be made, even if you want to enter them right now. So for instance, here's on Cardano. We first opened it at 86 cents. Right now it's at 92 cents. Our take profit is at $1.27 on this monthly swing trade. So still plenty of upside to go. Okay. Yeah, that's about it that I have for you guys. So stay long. Like the thumbnail of this video is showing you, this is bull market mode. Don't complicate it. Bitcoin is in an uptrend. Bitcoin dominance is in a weekly downtrend. We have not had this since 2022. Ethereum is going up against Bitcoin nonstop since April. This is the ETH BTC chart. Solana is slowly going up against Bitcoin. XRP is slowly going up against Bitcoin. Things are good. So this is all classic signs of early alt season. As long as you pace yourself, you target the large altcoins, you should be good. Just target large altcoins, hold mostly large altcoins in this early stage. Right there swings up first before you move into mid caps and low caps. If you want to use my bots, you can go ahead and use them in the copy links, or you can follow my live streams, my trading challenge. All of the setups are there. You can set them up yourself as well. And then you'll be good. But this is not the time to be bearish. I want to reiterate this a lot. I don't want to be bearish. I continue to hold alts, and very simple. I want to shake the bear market PTSD. I want to shake the last 2 years of PTSD when altcoins have been disappointing. When it turns, it turns. And right now it's turning. So I don't want to miss this. That's why, yeah, totally aligned with top 10 altcoins all being good bets right now. Okay, that is it. Just a very quick one and easy for you guys so that we stay ahead of the market and we stay exposed to altcoins. Just looking at the data very clear without no bias. Thank you guys for joining the live stream. Follow me on X at VirtualBacon0x for quick alpha tweets before I make them into in-depth videos. Check our bots and check our trading community if you have any questions. thecoiners.io, free chats. I post everything on there as well. And we have a ton of other content from other analysts, and our team are able to point you to our previous analysis and questions for everything about the markets. Okay, thank you guys for joining, and I will see you on the next video and the next live stream. Bye-bye.